Is there going to be a real estate market crash like some people are hoping for? Or is it more likely that there's going to be a market correction, and is it possible that it's already passed? Home prices have dropped from this time last year, especially for single family homes and condos. Single family home prices in Kelowna are down 5% year over year and are down 13% from the market peak of March 2022, and condo prices are down 11% from the peak. But more recently, home prices have started to appreciate again. This could mean that the market correction is over, or at the very least, that a market crash is highly unlikely. Let's dive into this month's market update. I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you'd like to stay up to date on my local market of Kelowna, make sure you hit the like and subscribe buttons so you don't miss out on future update videos. And whenever you're ready and you'd like to book a call with me, you can hit the first link in the description to book a call at a time that works best for you. Starting with the number of sales, you can see that 2024 has been behind the pace of 2023 every month except January. Last year, in 2023, the market took a bit of a dip when the Bank of Canada did its last of 12 rate increases in June and July, and you can see that sales activity slowed down. This year, the Bank of Canada decreased rates in both June and July, and you can see that the activity over the last 3 months to 4 months has been relatively flat. Sales year to date, though, are down 12% from what we were last year. Inventory levels continue to grow. Last July, we had just under 3,100 listings in the entire central Okanagan, and this year, those numbers have grown by 37% to 4,200 listings. That is the most inventory that we've had since 2011. You can see, though, from June to July of this year, that inventory has dipped slightly. The benchmark price of a single-family home is up in July to $1,025,000, which is up 1.6% from June, where the benchmark price was $1,009,000. That benchmark price is down year over year 4.2%, though, from $1,070,000 last July to $1,025,000 this year. If we take a look at what the benchmark price has done over the last couple of years, you can see that back to June 2022, we were starting to see that decline from the peak of the market, which was the spring of 2022. It softened through the rest of 2022, and then it started to pick up momentum again in the spring of 2023, where we saw another peak. The market corrected down to December 2023, which was the lowest point that we've seen over the last 2 years, but as you can see, over the last few months, those prices have steadily been increasing again. If we take a broader look and look at what the market has done over the last 5 years, you can see that the price on average, or the benchmark price, is up considerably from where it was 5 years ago. If we take out those two bubbles in the market where we've had the correction from, you can see that prices are back to what they were in the fall of 2021. Moving on to the townhome benchmark price, you can see that it was up a whopping 8.7% in July from what the price was in June. The benchmark price of a townhome in July was $779,000. Year over year, that price is up as well, 1.6% from what it was last July. The benchmark price graph for townhomes is a lot more volatile than it was in the single family homes, though it does reflect the two bubbles that we had in the spring of 2022 and 2023. You can see that there was a significant jump in the price of a townhome last month, and I think I have an idea why that's happening, and I'll get to that a little bit later in the video. Taking a broader look at the benchmark price of townhomes, you can see it's up considerably from the spring of 2019. There was a couple of bubbles, but you could more or less say that the price of a townhome now is back to where it was in the spring or early January of 2022. Moving on to the condo market, you can see that the benchmark price increased in July to $493,000, which is a 0.9% increase from June, but it is an increase in a month-to-month basis in a market that a lot of people saw softening and thought that the prices would continue to slide. Going back over the past year, though, you can see that the benchmark price of a condo is down nearly 5% year over year. If we take a look at the benchmark price of a condo over the last 18 months, you can see that there's a lot of volatility, but the general trend is it has been down since the most recent peak of the spring of 2023. That being said, if we take a broader look at the benchmark price of a condo over the last 5 years, it too has grown considerably. You can see that there were two bubbles in the market, then a market correction, and our price is more or less back to where it was in the spring of 2021. Taking a quick look at manufactured homes, we have to look at the average price because they don't publish the benchmark price of a manufactured home. But you can see that the price of a manufactured home for July, on average, was just under $267,000, which is down almost 3% year over year. The average days to sell in Kelowna is 51 days for a single family detached home, which is up from the previous year, 53 days for a townhome, which is up over the previous year, and 46 days for a condo, which is also up over the previous year. The price ratio, that is the price that a home sells for versus its most recent list price, is just under 97%. So you can see that most buyers are getting somewhat of a discount off the asking price of the home that they're buying. Taking a look at the months of inventory, you can see that we are in a buyer's market in all categories. Single-family detached homes has 8.8 months of available inventory, townhomes have 7.1 months of available inventory, and condos have 6.6 months of available inventory. So why aren't prices going down faster or crashing since we're in a buyer's market? Months of inventory has been into buyer's market range for the last few months, especially in single family homes, and prices haven't reflected that as quickly as you might think they would. And one of the reasons for that is it does take a few months of being consecutively in a buyer's market for the impact to be seen on the market because sellers are slow to adjust. This affects the number of sales because buyers are waiting for prices to come down. I also think that the months of inventory in single family homes is slightly inflated. I think the real number is around 5 to 6 months of available inventory, which would be a balanced market. The reason I think this is there's a number of homes on the market which I would consider to be aspirationally priced or unsaleable inventory. They're just priced simply too high, and buyers aren't even looking at those homes when they're doing their home search because the price is just unrealistic. There's probably enough homes on the market to make up 1 or 2 months of available inventory that are just simply not really a saleable product. Another contributing factor to townhome and condo prices not declining is that just 2 short months ago, townhome and condo inventory was in a balanced market. So we haven't seen a long enough period of the price of a townhome or condo being in a buyer's market to see significant downward pressure on prices. The other reason the townhouse market is staying strong is it's a common landing area for both downsizers and upsizers. If you've got someone who's living in a home and looking to downsize because they're empty nesters and they're not quite ready for condo life yet, they're going to look at a townhome to downsize into. The same can be said for someone who started out in a condo. If they're looking to upsize and they don't quite yet want to have a single family home, they're going to move into the townhome market and start looking there. And we can't forget about first-time buyers who perhaps qualify for a higher mortgage or they've saved more of a down payment that for their first home they move into a townhome instead of a condo. All of these 3 factors are contributing to the townhome market remaining strong and putting upward pressure on prices. The Kelowna real estate market looks like it's stabilizing, as I've been mentioning over the last couple of months, but we are in a buyer's market. This will mean that there's not going to be upward pressure on prices, and if we stay in this buyer's market for a little bit longer, there could be a little bit more downward pressure on prices, especially in single-family homes and condos. But with interest rates coming down again, we could see more buyers entering the market, and that surplus inventory could dwindle fairly quickly. That's my insight, but I'd like to know what you think. And let me know in the comments down below. Do you think we're still going to see more of a market correction or a market crash? Or do you think we're going to see some stability in the Kelowna and the Okanagan real estate market over the next 6 to 12 months? I look forward to reading your comments. Thanks for watching, and we'll see you next time.